Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long time frame. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So this bull market is apparently we have a new one. It's 4 days old, and we've made a new bull market 20% in 4 days. So the news media is already on it as a bull market. That's really incredible. Anyway, what should you buy? We're going to cover that off today. Some people want to know, should I buy the best growth names or should I buy the best beaten down names or the beaten down names? What should I buy? We're going to try and cover that off, and I'll try and show it to you in a few different ways. So we've got a massive four-hat rally on the Dow with volume. That's the new expression. We're up 4,000 Dow points in 4 days. And how are the FANG names doing? We're going to go look at the big leaders. They actually held up very well, and we're going to show those charts. Should you buy garbage or quality off the lows? And on this particular rally, I don't think it mattered. We got some good stuff both ways, but we're going to cover off what the charts or what the data tells us. And where do we go from here? So I'm going to lay that out on a couple of S&P charts, Nasdaq charts. And then the gregschnell.com website. I've got a new one coming out soon. It'll be set up a little better for me. So this first one got going and it was okay, but it's quite frankly not cutting it. So we're going to get the new site loaded up with videos, newsletters, unique training courses on charting, stuff that I hope you'll find very interesting. So anyway, lots of exciting stuff to come. So first of all, here's the Dow. And what I want to show on this particular chart is we got down to 18.2. We've rallied up to 22,500 and change. 22.5, 52 is our close, and 595. It's amazing when 100 points is just kind of buried in there. Anyway, it was a pretty stellar rally, I think, by all accounts. So with this, one of the easy things to do is to just go and grab the annotation tool, and you're going to go get Fibonacci retracement. And if you pull down from the top, you're going to get how much the retracement level is. So in this case, we're right at the 38.2% retracement. And a bigger rally, you could see, would be the 50% and the 61%. Now, Boeing is obviously a heavy weighting in here, and it's had a really incredible rally. So that's been one of the big pushers on the Dow, but it's back to the 38% retracement. When we go look, cancel that. When we go look at different markets, so let's go over to the S&P 500. And this is Arthur Hill's presentation where he's got the percent up down. And so we had a just under 70% rally today. So it's working harder. A 75% rally, this black line is at 80%. So we're trying to get up here, and there's a thing called a Zweig bread thrust. And what that is if you have a whole bunch of volume kind of push through very, very rapidly, and your advanced decline data spread over 10 days is so powerful that it causes this thrust where there's so many things trying to go so high so quickly that you get this bread thrust. Tom McClellan, a good friend of mine out of Washington, state of Washington, has done a really good review on that. And you can go to McClellan Oscillator's website. And over there, what you'll find is on that website, there's some impressive, his historical study knowledge is phenomenal. But anyway, he went through to talk about how this bread thrust data works. And what you can see is we've had quite a few huge 80% up days. We've had 190%. This one wasn't quite as high as the previous one, but the fact that we've had a couple of good thrusts back to back here is pretty important. Now you can see in early February we had some thrusts here, but they weren't of this sort of variety with so many stocks participating. However, over here back in mid-October we started to get some pretty good thrusting, and that's kind of what we've had now. I'm still not of the belief that's what's going to happen. I think we're rolling this out into a much bigger problem. I could be wrong, and this thing could keep running on me. But right now we're at the 38% retracement on the S&P 500 as well. And looking at all of those things together, again, it's been a huge rally. I think anytime you can make your annual returns in 4 days, that's pretty impressive. Um, it is one for the record books just in terms of power here. So I still see the Nasdaq 100, the 200-day moving average up here at 8250. I mentioned that somewhere between 8 and 8200 in my newsletter. I said that would be a good target area, and if you got a rally, go ahead and play it. But it would be just that, a rally. So when we're looking at this, what we want to keep aware of. So everything is sitting right at the 38.2. It's almost like the computers were playing in the market here. Anyway, the 50% retracement for the Nasdaq is right at the 200-day moving average. So that sets up pretty well for us to get back to. So if there was a bit more of a rally, perhaps we could get up there. I think what you're going to find now is all of a sudden it starts to diverge as to what's still performing. Maybe it just moves over into the big leadership names and rolls on from there. Really difficult market in terms of what's working. So here's Amazon, and Amazon is almost at the highs for March here, which is pretty incredible considering how ugly March was. It rolled over just a couple of days before options expiration in February, and we've had a big thrust off the lows, but Amazon actually made its low a week earlier than everything else. So I really like Amazon coming out of here. It's holding up nicely. Now it's kind of right at this 5-day resistance. Apple had a good push at the end of the day. It was just kind of meandering in here and then followed it up at the end of the day to get back up very close to 9-day highs. So that's not bad. Facebook. Not seeing the same sort of enthusiasm out of Facebook. Still some nice up candles from $1.40 to $1.65. Pretty nice move, $25 on there, but not quite some of the moves we've seen. When you look at Boeing from 89 to 160 or something, it was crazy. So here's Google. Google is just kind of meandering down here. And one of the things that's happened is on these advertising platforms, apparently their ad revenue has dropped quite a bit during this whole slowdown in business. So Netflix is holding up quite nicely. I will say it's back above its 50-day moving average. That's not bad. It's not quite back up to the highs here, but again, March highs, if you got above March highs, you'd be at new 52-week highs on Netflix. So this is pretty close. I mean, it's only down $35 on 400, so less than 10% from the highs. Microsoft 155 to 190. It's got a little bit of a workout left for it here, not quite above the 50-day moving average yet, but trying to turn up. And here we've got Disney down in the bottom, and again you got closed theme parks and that kind of thing making it difficult. But this was again another nice rally up here, over 20-25%. So pretty good push off the lows. Anyway, so the big names are holding up, but one of the things I wanted to cover off today was just take some time, go through the indexes and check out what's working. So what I've done is I've set my indicator or my time period to 1 week, and I've gone through and I've just said what is up the most this week, and I ranked it by that. So we're going to go in and look at these charts, but I think if you've been following the news at all, the names on the top of this list, you'll pretty much know were they the best names or the worst names coming into this low. And Norwegian Cruise Lines is up almost 100% already. So really beaten down. Boeing was at $89, made it to $180. How unbelievable is that? So a full double, not from last Friday, but from the lows. Incredible move. Royal Caribbean, $81, 81% change, up $40. Let's just go in and look at some of these names and just see what they've done. So you can see, it feels death-defying to try and buy these things down from $60 to $7 and 90% off, and now it's given you a 100% rally, and it's not even, getting anywhere back to the previous highs. When we talk about percentages, percentages are really um, an important thing to understand. So when a stock is down 40%, you need 60% to get back to its previous high. When the stock is down 50%, you need 100% to get down to its high. So just that 10% more down needs 40% more up. Actually, 33% more up, but whatever. It's a huge change. And when you go 60% down, then you need 160% to get to the old highs. So when you look at something like a Norwegian Cruise Lines here, from $7 to get back to $60, this would be, again, about a 900 or 800% move just to get back um, all the way up to the highs here. And because the scale is exponential, this candle looks particularly big. It is huge. But the one thing, this is $10, whereas $10 is a very short sprint up here. So because of the logarithmic scale, it is showing it as being a huge candle, and it looks like 2 weeks of that would do the job. Well, if it moved up another, whatever, $10 or $15 next week, that would only, it would still be a good candle, but it wouldn't be nearly as long as this. So anyway, still a pretty strong stock. I think a pretty strong bounce. Boeing, this stock story amazes me. So Boeing pulls down really hard, and yet doing share buybacks all the time here, and now they don't want to sell equity to the government to help them get them through this crisis. And I have so much trouble with that. Uh, but anyway, what a huge bounce here. Nice big move from 75 to 175, or from 89 to 180. A beautiful 100% move. So really, really stellar bounce here. Again, I think Boeing's going to make it through the other side of this. Obviously, it's ugly water in between, but here's Royal Caribbean, so another cruise line. And again, you just see these huge, massive candles off the lows. Carnival, another cruise line. So you're getting the theme here. This one doesn't look nearly as powerful. It's just back to last week's high, where the other ones have gone past that. MGM Resorts. So all of the gambling names, Vegas is pretty much shut down. Macau, all of the big gambling spots seem to be under quite a bit of pressure, obviously, for traffic. And so this is bouncing up. I know of one hotel, it wasn't in Vegas, but it was 44 rooms booked out of 705 or something, like an incredible number. Oh, less than 10% of the hotel booked. So when you see big things like that, and if you imagine all of Vegas being set up that way, that's just an incredible amount of overhead to cover with zero revenue. United Airlines, so imagine that. We're going into the next group of beaten down names here. Really, really pushed down hard. Cody, a retail name. So this one, again, all of these were just terribly ugly. But I think the point I want to make here is you're not seeing semiconductors as the biggest bouncers here. Even though they've had incredible moves, they're not in the 50% move like this one is. Uh, just huge, huge gains coming up here. Some of the energy names have had big bounces, so this one's up 54% so far this week, but from a week ago, 5 days ago, up even more than that. So anyway, really strong performance coming off the lows. While we're on oil, I have to show you this. This is just unbelievable. So the Canadian oil crude has fallen to a record low of under $10 a barrel. And obviously with that, you're not going to make any money. So now what they're all starting to do is shut in production. So one of the sayings in the commodity business is low prices stops low prices. And the reason is because everybody shuts in production. And we're starting to see that in a big way across many, many different areas of the oil patch. So natural gas has had that problem for a while now, oil shutting in. If you see the Canadian shutting in, the US shutting in, around the world we go. Now, if Saudi continues to pump, I think we're going to have some pretty big debates going on. But anyway, if they continue with their increase that was going to start April 1st. So we're going to find out what's happening in oil, but I still want to make the point that when we come out of the back of the COVID-19 situation, and I don't know if that's 3 months, 6 months. I definitely do not think it's over already. Uh, the 3 months, 6 months, 9 months, a year, 15. I don't have the time frame. The point I want to make is on the bottom, one of the big areas of improvement should be the Canadian energy names, and the reason for that is they were limited by pipeline access, and if their workers can get back to finishing the pipes. Um, there was a new pipeline that should extend another 375,000 barrels out of Canada. Um, there's a couple of others on in the works. So as those pipelines come on board, and there was a whole bunch of smaller little improvements that came through, these companies were the price of Canadian oil relative to West Texas crude was really held down. And one of the big things that could happen here is not only do you get the gain in West Texas when it starts to move back up, but you should actually see a narrowing between the U.S. crude price and the Canadian crude price. And with that benefit, these names are down huge. I think some of the stocks dumped 80-90% just since February. And at the back end of this, again, just showing you how things have bounced up so meaningfully, I think it's an important area to look at. And I think one of the big areas coming off the lows here in whenever it is, and if you follow me at all, I try to cover this off, especially on my newsletter. I do a pretty thorough job on the energy names. But if you're interested in that whole thing, I think there's going to be 3, 4, 500% moves over a couple of years coming out of some of these names, and it should easily surpass what we see on the technology side. So anyway, if you're interested in following me for any of that kind of stuff, I'd appreciate the follow. So getting back to the S&P 500, whoops, no, that one, this Noble Energy chart. The point I want to make is these beaten down names clearly were the best performers. And if we go down, here's Lincoln National. So, $61 to 17, that's a 70% pullback or something like that. I think 75 would have been $15. So you're getting down here where all of these things, even on their first bounce up, this is up 68%, and again, down 70, up 68. You can see the difference. It's quite significant. Needs to have another whole move of equivalent size just to kind of get back there. Anyway, I like this whole theme just to understand it. Now, it doesn't mean if you want to buy a long-term hold at the end, you want to buy the garbage now. I think the bigger issue coming at us is that we have a lot of debt. As an example, Cirque du Soleil, if you've been to Vegas, they're unable to keep going, so they're going to shut down, and I think they filed for bankruptcy, if I'm not mistaken, today. And so there's an example of one of the pieces of the entertainment industry in Vegas, and I don't know how many different shows they had going on there, but all of a sudden that is all come to a screeching halt, and maybe that makes for opportunity for somebody else. But we're starting to see that in big ways, in big areas across the world, and so I think it puts added pressure on the banks, and I still think we're going to end up with more of a fiscal problem or more of a financial problem rather than just an employment problem. And not just an employment problem. Those numbers were massive, and I think will probably be just as big next week. So we've got lots of damage out there, and I don't think this 20 or 30% move up in the stock market is going to be the end of it. Okay, so one of the other things to go look at is the other side of the coin. And here we see that even some beaten down names didn't bounce. So as an example, here's Nordstrom. It's down 15%. So if you went right for the heart of it, these companies were struggling before, and I know Nordstrom opened a new store in New York City, and that was supposed to be doing pretty well. But all of the names that were holding up, Campbell Soup, Clorox, Walmart, all of these names, really didn't participate in the bounce. So it wasn't like if they were holding up pretty well, you wanted to stay in there. And Regeneron was one of the names that's been touted for finding either a vaccine or a cure for the COVID-19 virus. With that, you can see the stock. I mean, it wasn't like it fell a lot. It fell 7%, but when everything else is moving up 50, 60, 70, 80%, it's not exactly the area you wanted to participate in. So what we see here is the defensive names and the really beaten down retail names didn't hold up. All of those missed this whole rally. And I think that's an important thing to remember. So if you're going to try and find, you know, good names to invest in for a short time, and some people say, well, I'm a long-term holder. Well, if you can make 50, 70, 80, 90, 100% in 4 days, isn't that good enough? I mean, that would have been a 5-year hold. So think about, don't use your time as your filter, use your percentage as your filter. And if you can capitalize and make a large gain for just a few days, that's a pretty nice backdrop to help get you, if you aren't back to whole after this rally, or if you're getting close to back to whole or whatever. It's these big rallies that help. I still am of the belief that because of the breadth of the problem in the financial space, it is very considerable. So one of the things I keep talking about is the debt ratio for banks. And what we see there is a bank has so much money in the bank, whatever, $100, and they're allowed to loan, pick a number, $118 out for every $100 they have in the bank. So they have some sort of a ratio. But the Australia banks have some names up in the 160% level. So they have $160 loaned out for how many assets are in the bank. Well, if you can imagine that under the pressure of what we've seen with every asset class breaking, commodities, real estate, bonds, equities, all of a sudden the bank doesn't have as many assets in the bank. The money they've loaned out now all of a sudden makes up a bigger percentage, so their ratio of assets to debt, or to book debt, how much they booked out, that ratio is exploding. And we see that not just in Australia, but in other countries. Now, Australia had some extreme ones, and if you've been with me for the last couple of weeks, we've gone through some of the banking charts, and I pointed out how weak some of the banks in Europe were, the Japanese banks, these Australian banks were in the list. And without even, I didn't realize that their debt ratios were so high in Australia, but it comes through in the charts. They showed up right with the list of some of the most beaten down names in the banks. And the one thing we didn't see a whole bunch of was the banks at the top of the list on the rebound. And I know some of them had a pretty good week, but my point was, I think there's still financial tension there, because it wasn't one of the places people went to find a big bounce, even though they were pulled back pretty hard. So that's another clue for us here, that as long as the banks are in trouble, I think that's a particular area of concern. Now, lithium has been a really important area in the electric vehicle market. And one of the things about lithium is, it's only refined or found, mined by a few people. Albemarle is one of them. And what we find on that particular stock, it didn't rally at all. And that really surprised me, because I thought it might take on a much better move. Anyway, I hope that I've been able to show you just kind of this scale. And this is within the S&P 500. Obviously, if we broadened it out to small caps and mid caps and other companies, we'd probably see some more names in here. But here's Cabot Oil and Gas. It didn't rally all week. Very surprising. So be careful out there. You still got to pick your spots, but I think some of the big names that was pretty high on the list. I mean, I was amazed, considering nobody was traveling. Everybody seemed to get a lobbyist in front of Washington pretty quick to get their industry looked after. So here we have Wynn Resorts. This is I believe, the Nasdaq 100. And what we see, again, just sorting by the most up for the week. So let's just go back to 1 week. Again, the big names that got beaten down. Here's Expedia. Obviously, it had a significant move. And notice most of these have a scooter ranking that's quite low. Lululemon had a pretty good bounce. That's nice to see. We could go look at that chart just because it's different. It's just getting back to its 200-day moving average. And one of the, I should have done that back here. Let me just go back and get this for you. That when we want to watch and see where a bounce location might take place. So let's just go back 15 years. And here's the S&P 5. What happened there? Oh, I must have, sorry about that. I was changing my cursor size so that it's easier for you to see, and I must have typed it in this box. Okay, so now we got the Nasdaq 1500, and the point I want to make is here is the initial pull down from the October high, and on the Nasdaq it actually made its top around the end of October, and then it pulled down, came down pretty hard, and on the bounce back up it wobbled around the 40-week moving average or the 200-day a little bit of time. Then it came back up, tried to get through it again, and then fell all the way down. And so I don't know if we're we're still below the 40-week moving average, the green line at this point. And so the real question is, will we have enough momentum to get all the way back up to the 8,500? Could be, again, this 50% of the move, because this is a logarithmic scale, 50% of the move is right around the 200-day moving average or the 40-week moving average at 8,200. So I want to use that as a guide to just try to keep my enthusiasm contained. If this is going to be a bear market, and by the way, it would be the fastest 30% down and back up if it was a new bull market starting today, according to the Wall Street Journal and other newspapers, based on a 20% bounce. But I think in all of these market moves, you can have lots of bull market rallies that would equate to a bull market, but you're still in a downtrend in general. So to me, the big suggestion would be very careful here and try and make sure if you're making some big profits or you didn't clean out, you didn't have a chance to sell prior. We still have some big financial issues to work through. So try and maintain at least some cash for if we got an opportunity to buy lower, you would be all set up for that. Okay, I briefly want to show the Canadian market just because there's quite a few people that follow me in that area. And what we see here, if we just go back and do this 1 week and rank by there, we also had some of the marijuana names were big names that started to bounce. Aviation, energy names. So the same sort of thing happened even outside. But one of the big areas of improvement was marijuana. And it was called an essential service in Canada during this pullback. So anyway, along with the grocery stores and the alcohol outlets. So with that, there might be something there in the marijuana names. And again, look at this move. I mean, it was $1.47, but an 81% move off the lows, making it a pretty significant place to get on board, I think. And there were some other retailers. Here's Canadian Natural Resources, Canada's largest oil and gas company, and it was up 30% off the lows. I mean, that's a huge company. That would be one of the names that I would use in the future. I don't own it currently, but that would be one name that I would be looking to get into. Anyway, if you want to follow me for the energy names, especially some U.S. and Canadian energy names on the bounce, I'd be happy to help with that. So thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays and Fridays at 10:30 a.m. Eastern Time. You can also see the recordings on the StockCharts YouTube page. If you get a chance, please head over to my website, check it all out. There's lots there, and I hope to get that changed up right away onto the new site, and it should be even better. Thanks, everybody. Have a good weekend. Bye-bye.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.